Where's your focus right now? What's your read on the macro picture?
Well, we actually see the macro picture as being something really exciting and opportunistic for Fidelity. I'll echo some of what it sounds like Chase Coleman was saying, which is now is a time for investors to really be opportunistic and find great investment opportunities. The reality is there are 1,400 unicorns globally worth about $5 trillion. There's a lot of great businesses out there for investors to come in and invest. And unlike 2021, we're starting to see a real rationalization in valuations. Some would argue there's still some room to go there. But when you look at the peak of the market in 2021, private market valuations were 3.5 times more expensive than the NASDAQ on average. And you saw some companies raise at 100 times our ARR or even higher than that. And valuations have really rationalized. So great businesses, valuations that are making a lot more sense, and we see a lot of opportunity.
Caroline, I think you and I are trying to get a real global perspective as well, not just which sectors are sort of most interesting right now, but also geographically, debates about China, the Middle East, where there are opportunities, right?
Yeah, I think that's exactly right. And perhaps one that's garnering a little bit of, what should we say, emotion on public forums such as Twitter, Karin. I'm interested in your perspective of global allocation of money right now. Where are the valuations looking the best?
Yeah, it's a great question. The reality is, I think there are great opportunities globally, and it doesn't always come down to just valuation. A lot of what we're really focused on is what's the TAM? What's the total addressable market for a business? And what type of problem is that business solving? And do they have a real durable competitive moat that's durable over time? And of course, we want to make sure the valuation is right and appropriate for that business. But when we look geographically, we see really large addressable markets in regions like India, for example, where we've made some private investments over the last couple of years. China, obviously, we obviously take into account the geopolitical background of China as well, but Europe as well. So we are a global investor, both publicly but also privately. And those are a couple of the regions that we're most excited about. It really comes down to the addressable markets.
A little there, Karin, in China. Because you say you take into consideration geopolitics. How is it affecting the way in which you allocate?
Yeah, I mean, the reality is, risk return, right? And we can't always prognosticate what governments are going to do, especially governments internationally. And so we just take a little bit more of a risk premium when thinking about allocating to regions where there might be a little bit more geopolitical risk that we can't otherwise account for.
And Ed, we're going to have that conversation in depth a little bit later with a key VC. But Ed, what's also interesting, the thing we're always talking about is, okay, we talk about countries, what about sectors? And boy, do we talk about AI a lot right now.
Yeah, I think what's interesting for me, Karin, in particular, is that lots of the most exciting companies are private, and they're staying private for longer. I think I'm right in saying that you invested in SpaceX for the first time back in 2015. That was a long time ago now. How do you play that field where the most attractive companies are staying private?
Well, listen, the beauty of our model at Fidelity is we can invest privately. We can obviously invest publicly. That's clearly in our DNA, and we can be opportunistic in investing in just the absolute best companies out there. I think it's not any secret that we all think the IPO market has been shut. It's been frozen shut for over a year at this point in time. And the private markets have such a strong depth at this point in time, not only in capital, but also quality of investors, that the beauty is that all of these companies can go public when the timing is really right and when the stars align, as opposed to being forced to go public. The other reason why we do this at Fidelity is, as you mentioned, about the number of public companies that are out there have basically halved in the last 25 years. And there are a lot of companies that only exist privately. We don't have access to them publicly. And so it's really strategically important for us to start investing well ahead of their public event.
You've had a lot of great exits, right? I think Facebook, Uber, but less focus on SpaceX. How do you stay focused on the opportunity for them long term? Do you come back in and do later rounds for fear of missing out? Do you worry about the partners that are touted to be going into a name like SpaceX? Saudi is a name that's been discussed. It's a really interesting mindset that you have to go into in an investment like that.
Yeah, listen, SpaceX has continued to execute extremely well. When we look at their Starlink constellation that's up there right now, the focus on Starship coming out hopefully soon. It's a company that's executed incredibly well. And no, we never invest for fear of missing out. We invest when we continue to think there's value for our shareholders in investing more. And those are the underlying core principles that we try to stick to.
We know that there are other areas than space that you're already interested in: data, social, climate tech, but also, of course, AI, machine learning. That's what everyone is seeming to be excited about. But where in the application of AI are you excited about? Have you come to grips with sort of where the money's going to be made?
It's a great question. We are still doing a lot of work on that question specifically. AI has obviously been around for decades, but needless to say, OpenAI and ChatGPT have brought it to the forefront, and it certainly captured the imaginations and the excitement of all of us. And that's a question that we're spending a lot of time and doing a lot of research on, meeting with a lot of companies to understand, where does the value accrete? Is it at the app layer? Is it at the foundational layer? Or is it at the infrastructure layer? Or is it some combination of the three?
Right.
We certainly don't have the final answer there yet. I don't think many people do. But it's an area where we're spending a lot of time and doing a lot of research.
Karin, quickly, 2022 really hard. You talked about Chase Coleman Tiger. Did you have to change strategy in reaction to 2022?
Listen, our strategy has always had core underpinnings of looking for great companies with a large addressable market that are disrupting something out there in the market, phenomenal management teams. I think what's changed for everybody is the concept of growth at any cost. And not just us, every investor is very, very focused on the ROI on every dollar spent, profitability, or a clear and convincing path to profitability, and really maximizing margins. But our core underlying principles have stayed the same throughout.